Looking at the Naira, which has taken a little bit of a knock over the last few sessions, give us an indication of where you see that going, because we have seen a bit of erosion of sentiment since there is a lot of talk about the amendment of the budget.
Good morning. I think at this point it's difficult to say exactly what the direction of the currency is, because traditionally at this point in time we get an influx of FX from the oil sector. That being said, we've seen in the last few weeks that there's been a negative bias towards the Naira, and like you had earlier mentioned, it's on the back of reports that the benchmark price of oil will be reduced. This in effect also means that there'll be a larger deficit, and there are presumptions that one way to bridge that increased deficit would probably mean a further depreciation of the currency. Yeah. In addition, we've also seen that there's been a lot of dividend remittances from multinational companies in Nigeria, and this is normal, nothing out of the ordinary there. Around this time we see most of these dividends leave the country. Plus the fact that there are also indications that the oil marketing companies are accessing or have an easier access to credit with the new issuance of the sovereign debt notes. Now, with all these factors happening at the same time, we've seen pressure on the currency. Now, for us to get clearer ideas to where the currency would be in the short and medium term, would have to wait out the inflows. But one thing I can tell you that has changed is that usually with certain amounts of money that come in, for example, we saw about $350 million from the NNPC, about $150 million from another oil marketing company come into the system this week. Normally what you would have seen is that with such inflows, you'd see an almost immediate gain on the Naira. Yeah. But as we speak, we've only seen about a 10 kobo gain, which is a bit out of the ordinary. So I think the negative sentiments are still a bit strong. But considering that most banks, or in total, the open position limits of banks are not indefinite or are not inexhaustive, what you'd find is that if this inflows also come in at the same time, there's a limit to how much the banks can hold. And that might strengthen the Naira in the long run.
Well, Sola, just looking at the crude accounts, because there's been quite a lot of talk about that, which has, of course, dwindled over the last, say, 3 years or so, because at one point we saw a crude account of around $20 billion. That's changed quite rapidly, but how instrumental do you think it is to have a crude account in Nigeria? Do you think that it's something that we should be seeing the government ensuring that they have, or do you think perhaps that, you know, in a country demand is quite robust, so we shouldn't be worrying about it too much?
Well, I think the key issue is more around what the funds are being used for. Because having the crude account, having a large stock of foreign exchange just sitting in offshore banks doesn't really help the country in any way. Yes, it looks nice on the balance sheet, and it improves the country risk ratings of the country, but beyond that, it doesn't really have much value. I think what we should focus more on is that with the dwindling of the crude account, what have the funds been used for? The value of those funds is the application of the funds, and as in what are the developmental areas which these funds have been put in. If that is the case, then I wouldn't worry if the crude account, if the balances there have reduced. It's almost like having savings that you're not using, but if you've used your savings for good investments, then you've just empowered yourself to get even more.
Sola, looking at bond yields, because they have started to look slightly better. We saw them spiking last week and early this week as well, but we know that the country has now released 750 billion Naira in budgetary allocations for April, which allegedly caused some kind of liquidity squeeze. So do you see things changing, sentiment towards, say, bonds changing from here onwards?
Yes, what we've seen is a bit less than 300 billion Naira coming to the system in the last week. And we have seen the yields on the bonds drop back to the levels they were about 2 weeks ago, before we had that short-term liquidity squeeze. But the point I need to make here is that largely the expectation was that the yields would not drop to the levels that we had 2 2 weeks ago on the back of the fact that the last auction, the 20-year yield spiked up to 10% from about 7% where it was trading in the market the day before. And that was a bit of a warning signal to investors who had short-term funds and were buying long-term instruments. The outlook for the federal government bonds now is that if at some point, maybe in about a month or so, that liquidity dries up, we probably might see such spikes again. And I think on the back of that, investors should be a bit more careful in terms of the risk of their portfolio, in terms of the duration they're taking onto their book.